Hi, my name is Elizabeth Nkukuu from Zurit Consulting, where we are all about making money simple so that life can be better. We have been discussing a couple of things regarding investments, and today we want to take that further. In the last episode, we went through investing in the stock market and how you can actually take advantage of the stocks of the companies that you invest in or the products that you use to actually grow your wealth. Now today, I want us to discuss about something, just an extension of that conversation. Mobile trading. What does that mean? The world has evolved. Everything happens on our mobiles, and so has the trading and investment processes. There has been a lot of growth in that sector, and most recently in Kenya, we saw the launch of ZD Trader, and for the first day that it was launched, we saw significant growth in the number of people who transacted. And that is not something that is really unique in Kenya. That is what happens globally. So when you think about investing, there are a couple of things that you need to understand even as you get into that stock. I want us to discuss 7 things that you need to be aware of even as you think through mobile trading. 1, do you understand the difference between trading and investing? Why are you putting your money? If you remember again in episode number 1, we went through why people invest. We are looking for returns, and you're putting money today so that it can grow. When it comes to the stock market, we do that for 2 things. We want to invest in and get dividends, and there are stocks that actually pay significant dividends. Think about BAT, think about Stanchart. Their dividend yield, and this is the amount of dividend divided by the price, is well above 12%, 15%. So those are clear investing opportunities. You can actually plan your life around it because the cash flow is going to be there and your principal will remain intact. So, understand, where am I investing? Am I putting this because of the capital appreciation, that the price will grow from 1 to 5 shillings? Or am I investing because I want to get dividend? So, understand as an investor, why am I putting this money away? Number 2 is what else do you have? You cannot take your kids' education fund and put it in the stock market. Reason being, things change. There are times that you'll do a good equity selection and stocks increase. There are a couple of people actually who have discussed about this, and the most recent one that comes to my mind is when Don Kipkoril actually said the way they tried to put money into the stocks and that didn't work out so well. So the question is, you as an investor, do you have something else? You cannot 100% depend on the stock market to survive, because if the stock market goes against you, then you have a challenge. So before you get into the stock market, the basics of investments: have an emergency kitty. The emergency kitty should be invested in something that is very liquid, like the money market fund, which you had covered before. Then, when you're getting into the stock market, if you cannot put it for 5 years, 3, 5 years, 10 years, I think Warren Buffett says 10 years. If you cannot be able to look away from that investment for that long, please do not put your money in the stock market, because what will happen, you'll actually feel so discouraged because the stock market goes up and down. So your time horizon plays a significant role, and just understand what part of the portfolio this is. Then, how do you determine which company you want to invest in? Remember, again, we covered that. Do you understand the company? I think there has been a lot of conversations about, do we invest in the Kenya pipeline, which now has already closed, or do we invest in Safaricom, or should Safaricom actually be opened up for us to invest in? All those conversations have been going on. But the question that you need to ask yourself, yes, I want to jump into this stock. How do I determine which one to go to? There are different ways in which you can determine, but the best one is really fundamental analysis. Understanding how this company makes money and how that money will actually be given to you. That is the absolutely way that you can actually be able to invest in. That helps you also when it comes to diversification, because you can have a concentrated risk. You can actually say that I know KPLC is going to do well. I know Diamond Trust is going to do well, or whichever stock that you want to, and then you can take a significant stake there. That way you are able to grow. But again, remember, even in investing in the stock market, it's a game of probabilities. So ensure that whichever stock that you're going to take, you can actually be able to see how it's going to make money, and you see yourself holding it for the long term. Then we shall jump into the stock market. It trades every day, every weekday. So the question is, the day you want to exit, is it automatic that you'll get a buyer on the other side? The answer is, the stock market does not necessarily give you that comfort. There are those times that you'll actually be willing to sell, but you'll not be able to get that stock. Or the other time you want to buy into a stock and you don't get the supply. So what you need to understand is, if I'm looking at this company that I want to invest in, how liquid or how easy is it for me to get those stocks? Some are very easy. When you think about things like Safaricom, there's a lot of shares that are trading. When you think about companies like KCB, a lot of those ones are really trading. But there are stocks that are very difficult to get. Think about the agricultural stocks. They could be very good, but they're very closely held. Things like BAT, closely held. So the question is, how do you make sure that you're buying into a company that you can be able to get in and out when you want to get into? Then always remember that there is, as we look at asset allocation, so is security selection. Concentration is very important. I talked about you can actually take a concentrated bet, but remember, because you're not 100% sure of how things turn out, you need a little bit of diversification. And you can diversify across geography. You can, for this particular case, when you talk about the stock market, and Nairobi Securities Exchange for that matter. Finally, I want us to talk about emotional readiness. What does emotional readiness mean? When you think about the stock market, there are those times that the stock market will go down 50%, 20%. In those times, what will you do if you have just invested? So remember, this is a long-term game. So you should be ready that even if the stock market is going to go 15%, if nothing fundamentally has changed in the company that you invested in, then you should continue holding on to it. And as you think about all these things, let's also think about the platforms that we are utilizing. The mobile trading platform that has come in, like ZD, it is going to help you with access. But the key questions that you need to understand, or key other things that you need to think about, is one, cost. How much is it cost to actually trade on? And then number two, are you okay when it comes to understanding what you're investing in? So when you think about investments, about money, a three-legged stool. One, access, which mobile trading has helped. Two, literacy, which is spend time understanding what you want to do. And then how much does it cost you? So we continue discussing matters investments in various asset classes. So see you in the next episode as we cover more things when it comes to investments. Thank you. Again, Elizabeth Nkukuu from Zurit, where we are all about making money simple and making life better. Thank you.
Learn, grow, prosper with Zurit.